I'm Charlotte McLeod with the Investing News Network, and here today with me is Lara Smith, founder of Core Consultants and CEO of Molten Metals. Thank you so much for joining me online today. It's great to see you.
Thank you, Charlotte, for having me.
Really nice to be speaking with you. And because it's our first time talking, you have a really interesting background of how you got into the mining sector. So I was hoping you could tell me a little bit about that, as well as the work that you're doing now at Core Consultants.
Yeah, sure. Well, I guess the joke's on me because all efforts to avoid the mining sector, and now it's been about 17, 18 years I've been in the mining sector. Uh, I started off studying chemistry in South Africa, and that's a one-way street into the mining sector. So then I tried to deviate, go and become a teacher. That was a very short-lived career. Went into finance in asset management on the buy side. And my first day there, they said, would you like to do the mining industry since you have a background in chemistry? I was like, nope, I'll do everything else, thank you. And literally, I did everything else. I was a food analyst. I was a sugar analyst, gaming. I could tell you all the rates of a wheel for gaming stocks. And eventually, because I was in South Africa, the chief investment officer at the time said, "Look, if you want a career in South Africa, where the top 40 stocks are all mining, at least at the time it was the case, I suggest you start analyzing the mining industry. Otherwise, your career here will be short-lived." And that's really how I got started. First on the junior mines. At the time in South Africa, there was a lot of black economic empowerment mines that were coming up, and now there many of them are not. The ones that have survived are actually pretty mid-tier senior companies today. Um, and that's how I really got into it. And then I joined a diversified fund in mining, and I was doing a lot of work in the Baltic region and in Africa, and I never stopped.
That's quite funny. So, despite all best efforts, you ended up in mining. And one thing that I also found interesting is you're actually in some very niche sectors very early on, like lithium, cobalt, rare earths. So, I was hoping you could talk a little bit about the process of learning about these industries that we typically see as very niche, building connections, and getting started there.
Yeah, sure. So I mean, I suppose firstly, my background in chemistry, doing a BSc and really reading a lot of journals helped. And that was always that's actually the way I always look at an industry as I start seeing what's coming through in academia. It doesn't always end up on the commercial side, but very often it does. Um, and then very early on, because I was working mostly in the copper belt, we had an asset that we had monetized, and you always think that these decisions are made based on very rational ideas and a lot of thorough investigation, but it's not always the case. Sometimes it really is people that pull it apart. And in the case where we were, there was two partners at the helm that were not getting along. So the idea was to basically get him to buy out our copper cobalt assets and then use the money and deploy it somewhere else. And I was trying to evaluate whether that would be a good idea and what that something else was. And I was asked to look at lithium, and that was back in 2007. And I suppose the reason for lithium was because there was an interest at this point in South America, and there was a lot of backwards and forwards and looking at the iron ore players, but iron ore was coming off at the time, so or it was very high, and then it came off later, and so lithium was a viable option, and it seemed better than cobalt for a variety of reasons, but cobalt took a very long time to take off, and it was very much a co-product for us. So it was coming off anyway, but we weren't really niche into that sector. It was more around the copper. Um, and so that's how I started to get into lithium. And again, I started reading the academic papers. What does it take to process lithium? And actually, from the academic papers, there's a lot that which went into application. You can start to phone these professors and process engineers. And very early on in my career, I got hold of a man by the name of Pedro Pavlodrich, who is actually credited with the extraction of lithium from brine resources in Chile. And we've remained industry friends, but he basically taught me everything I needed to know about hard rock and brines, and that's really how I start off analyzing any industry, and why lithium at the time, and lithium once you start looking at one minor metal, you can know about the rest. You start to learn what goes together. So rare earth came afterwards, and I then started going to Hong Kong for cobalt conferences, and started becoming a speaker there, and getting to meet other people in those industries.
Okay, I think that's a really good point because I think people would tend to think about all these minor metals as totally separate things. But as you're saying, you can learn about one of them and you start to know about all of them. So we have an idea now of your background. I want to talk about some of the things you're doing right now. So, as I mentioned, you're CEO of Molten Metals. This is an exploration company focused on antimony and tin. I want to ask you about antimony because I think it's a metal that people probably don't know too much about. So, if you could give us some details on that and what supply and demand dynamics look like right now.
Yeah, sure. Well, antimony actually is one of the oldest metals known to man. It was even used in ancient Egypt for makeup. But today it's mostly used as a heat retardant. And what's putting a lot of pressure on the market is not only existing applications, but future applications as regards batteries. And you got to start to look at all these minor metals, I guess, whether it's cobalt, lithium, tantalum, antimony. They all have very specific properties that lend itself to batteries or lend itself to a particular industrial application, rather than a store of value. So, like gold is a store of value, but these minor metals typically are not stores of value. They're in industry use. Uh, so specifically on antimony, what you have is about 50% of it, well, it's close to 60%, is used as a heat retardant. Some of that is used as anti-corrosive properties and for hardening bullets. Now, the reason for those heat retardants is because as you scale, antimony does act as a cooling agent. So it is a metal that does act as a natural insulation. So that if you're now talking about batteries and you're putting very volatile matter in a battery, you're contemplating lithium under your car, and it's not these small minute. So the trend used to be, let's take a brick phone and make it into a little portable device. Now we're going the other way, and we're going, all right, let's take the same lithium battery, scale it up, and put it in your car. Um, Take a small battery that might be used to power something, scale it up, and put it on an electric grid. And once you start to scale something from laboratory to commercial to mass production, you start to release a lot of heat. And those properties, which might not cause any trouble, start to cause tremendous trouble. So antimony has got its use as a heat retardant, which means that as you start to scale these batteries into mass batteries, which is what you really need, because the holy grail of a decarbonized future is if we can actually take renewable energies and store it, harness it, and store it and use it when we need it. So when the sun doesn't shine, when the wind doesn't blow, we have it. And that needs batteries at a huge scale. And for that, there is antimony.
Right. And there are so many critical metals, as you said, where, this green energy change, the electric vehicle revolution is really driving demand. So I wondered if you can talk a little bit more about, with antimony, is there supply available to meet this growing demand? What do the numbers look like there, if you can expand a little on that?
Yeah, so it's a very, very niche market. It's around 170,000 tons a year, and that market is broadly in balance. Currently, it's pretty much in deficit. And the way the supply chain works is you'll have your raw antimony feed as ore, and then typically either ore or concentrate will get sent to a roaster. And there's a couple of roasters outside of China. There's a major one in Oman. There's US antimony in the States, and they would then produce either antimony trioxide or antimony metal. The majority of it is antimony trioxide, and then that is really what will be used. If you've got very, very high grade ore, some of it does not have to be roasted. It can actually be used as a concentrate directly in applications, depending what that application is for. Um, but where does it actually come from? Oh gosh, about 70% is produced in China and roasted in China. And then you've got Russia. And Russia was actually at some point quite a big supplier into Oman. It then built its own dedicated to roasters, and very little material is actually coming out of Russia. It's not even going to China, it's actually being kept for its own purposes. Um, then you had Zimbabwe, but Zimbabwe is not a good producer or a big producer at the moment. And then South Africa, which was actually a lot of antimony occurs with gold. So in the case of South Africa, it was a gold antimony mine, but it now runs much too deep. So that's not commercial at the moment. So really, you've got not much coming out of China from an industrialized source. You do have a lot of artisanal miners and small scale miners, and the reason is there, there's there are several commodities, metals. I mean, tantalum is one of them, which lends itself to artisanal mining or small scale mining because it does have use and value if the grades run high enough and you can mine it on the seam. And that is true for a lot of the antimony deposits. That's true for antimony deposits in Pakistan, in Burma, in Iran, um, in Turkey, in Bolivia, and really that's what's happening. They're mining on the seam. They're taking up high grade. They're hand sorting it for high grade ore, and then they're selling that. So it's not much in terms of industrialized supply coming through.
Right. And based on that, you can kind of start to see why we might want to find some new sources of that. I want to briefly mention tin as well. This is a metal that Molten Metals is also focused on. So, tin is probably more familiar for investors. Of course, we know about tin cans, but again, this is a critical metal that has growing use in the battery sector. So, if we could just look at tin supply and demand, what you see in the market there that feels compelling.
Yeah, look, a lot of tin cans today are actually aluminium cans. But yeah, so I take your point. Look, it is much more of a mature market. It's almost double the size of antimony. It's about 350,000 tons a year. Um, Most of tin goes into soldering, and that is still the case. And a little bit used to go into lead acid batteries. Where the opportunity now with tin is concerned is also in coating the anode for lithium ion batteries. And again, it will act as a cooling agent. So it actually stabilizes the lithium anode and actually allows it to react much better and adds a lot of efficiencies to the battery. So that's what they're looking at for that. So they expect the last figure I heard out of the 350,000 is they expect around from 24,000 to 60,000 tons required over the next 5 years. That was the last paper I read for tin into batteries specifically. So again, it's a question of where does it come from? Where are we going to get tin? There has been recent investment into the sector, but it's very challenging to find a high grade tin source that is easy to mine. And, and also the question of where is it? Where's the deposit? One of the biggest deposits, Malaysia, Indonesia, DRC. So it's not easy to find a credible tin source that's high grade, amenable to effective mining, and in a nice jurisdiction, I guess.
Right. And of course, with molten metals, you're trying to answer the question of where we will get supply for these metals. I believe the company has assets in both Canada and Slovakia. So maybe you could talk about the company's goals for 2023 and what you hope to accomplish this year.
Yeah. So I guess there's some similarities to the product to those mines, and several differences just in the way one goes about mining in those two different jurisdictions. But the first thing we're going to be doing is we'll have to do a capital raise. And a lot of that money will go into developing the Slovakian assets, Tori Rover. The reason is because there's a lot more information known about those assets than there is in Canada. Canada, that one was last producing in about I suppose during the First World War. Its use was in hardening bullets, and it was discovered around the 19th turn of the 19th century. So that's as far as Canada's gone. It hasn't been mined in terms of a modern method in recent times, but there are large stockpiles there, and there are tailings, which would be extremely interesting to look at and possibly process, and then have a look at the underground deposits and how we can start proving that up. So that's Canada. In Slovakia, things are a little bit different because it used to be owned by the Soviets during the Soviet Union. Slovakia was, of course, part of the Soviet Union before it became part of the European Union. And the way they used to attack their antimony assets was they used to build adits then as a collective. So if Russia wanted antimony at the time, they would build these adits, they would calculate the resource as they went along building these adits, detail them. If Russia wanted the antimony, then they would start to extract the antimony as they went along. If they did not want the antimony there because there was no need from central Russia, then they would close that that particular adit which they had built. So what you have is these long tunnels, for those who don't know what an adit is, of information of that's almost like the mine is almost built for you. And initially they started closing those with gates. Then that led to a lot of theft, and then they started exploding those adits. So you have this rock fall, and what you have to do effectively is you have to open that. You have to start removing the rocks, reinforce the adit, and then start going in and reconfirming what has been done. And because you're basically twinning the sample, you're basically checking against the old maps and making sure that it's there. It's a lot easier and a lot cheaper to get into production, to get a reserve statement firstly, and to get into production. So that's why a lot of the efforts will be concentrated there.
Okay, really interesting. So that'll be something to watch going forward into this year. We've taken kind of a deeper dive into the metals the company is focusing on, but of course, as you've been alluding to, there are so many minor metals that have a big role in basically the future as we move toward a greener future. So I wonder, what other minor metals would you highlight for investors to pay attention to right now?
Sure. Well, tantalum. I suppose there's a lot of demand right now for tantalum. A lot of companies looking at that. Um, I think a lot of these companies just they'll all have their day in the sun, I guess. Rare earths has come back, but yeah, I don't see how Dig and Delivers make too much money in rare earths. It all kind of gets made by the refineries. Um, a lot of outside of minor metals, you have a lot of uranium come back in demand. A lot of clean fuels, alternative fuels. I mean, even thorium is has now got a market. I mean, that used to be a complete nasty. Your mine was dead if you had too much thorium. Now there's actually a market for this. So I think a lot of these things will just play roles in the green economy. Tungsten, I mean, again, the price is quite low for tungsten. I don't know if it's at the point where people want to open up a mine just for the tungsten, but tungsten is also going to be needed. So yeah, it's a different world. It's certainly a metals focused world now compared to only coal, only oil, but that will take time. That will take time. I think there's still place for hydrocarbons too.
Right. And the other thing that I want to touch on is supply chain security, which has become a really big issue due to COVID-19, Russia-Ukraine war. I think governments are really starting to pay attention to making sure that they do have these stable supply chains. So my question for you is, do you think that countries around the world are doing enough, or what could they do better?
Oh no, I definitely don't think they're doing enough at all. And I'll tell you why. And this is something that I've like thought about a lot, a lot. That firstly, they don't get involved early enough. a lot of what if a lot of the critical metal, how do I say it, funds that are available is you have to show NI 43-101, you have to show a JORC statement, you have to show all these things, but you don't have the money up front to actually produce these things. So that leaves opportunity for a higher risk investor, China, to come along and give you that money to get your NI 43-101 or to get some kind of knowledge around the resource. What do they want in return? They want offtake. So suddenly you look around and you've got your best deposits, which you did not know were your best deposits, are not owned by the people by where you want them to be, and that becomes a problem. So I think where where mining has got a lot to learn from the high tech sector actually is if you take sort of the Silicon Valley, the high tech sector, you had a lot of funders come forward in the beginning for pre-seed rounds. And pre-seed rounds are what I call pre-NI 43-101, like greenfield, not even greenfield exploration, just pre-NI 43-101. And there isn't enough funds out there for pre-seed. And that leaves you vulnerable as a country. That's the first thing. And a lot of these, if you actually like drill into the funds, they've got to be matched. So they'll give you 20 million if you want 20 million, but but you've got to be able to match it for 20 million. And a lot of these deposits don't require 20 million. You can get an antimony mine into production in 5 million. You don't need 20 million. And suddenly you've got antimony, or suddenly you've got a stream of tin. You don't need these huge deposits in order to make a dent in your supply chain, because you're starting from such a low base that anything you get is going to be something in the right direction. But if you don't start putting up that higher risk capital, and that higher risk capital doesn't come in friendly hands, or it becomes too expensive, so that leaves you with management team that are like, well, they've taken half my company is owned by somebody else now. It's too dilutive for me. Then nobody's engaged. But if you come with a reasonable amount and higher risk capital, and you don't take that much, so it doesn't dilute management to that extent, then you've got an engaged management team, and you've got a potential for a mine to go forward. And the West is doing that very badly.
Okay, I think those are some great points. So, really, we're seeing countries make it harder than it has to be to get these assets into production. I also want to touch on the retail investor side because I think that people will look at these metals markets that are smaller, they're more opaque, and they may be a little bit confused about how to get into them. And you've been telling us, if you start to know one, that makes it a lot easier to know the rest of them. So I wonder, for retail investors who are looking at something like the topics we've been discussing, what would your advice be for them if they want to get involved and put money into a company like this?
I think it's a lot of momentum trading a lot around the retail investors. But I feel like for the serious investors, who then there should be a lot more homework than what is given. And I mean, for me, I can only speak for me, but again, I come from an academic background, and I at one point I knew the periodic table with all its numbers by heart. So that's just how much of a nerd I am. And if you start to know the periodic table, then you know the properties, and what occurs with what, because it's actually very detailed the way a periodic table is ordered. So if you start to look there, then you can say, all right, well, what else is going to happen, and what else is going to happen, and what else is going to happen. That's why tin, tantalum, they've all got these uses in batteries. And if you start looking where they occur in the periodic table, they share very similar properties, so it becomes obvious as to why. So that's sort of on a macro level as to how you can start to get to know these commodities very quickly. Um, and all these commodities, all these metal markets have very few drivers. So if you can identify the top driver, then you know which direction it's going to go. So if you're going to predict any sort of metal, and I don't come from I mean, I haven't done share price prediction in many, many years. But a lot of what I've done, sort of in the last 16, 17 years is metal price prediction. And really what you're looking for is um, you want to know your magnitude and you want to know direction. So it doesn't matter if like the tin price goes to 28 or 29. You really want to know the magnitude, you want to go, and you want to know the direction, then you want to know how much can you make money. So I think that's how you can start to look at these um, materials. Then you start to look at who the seniors are, what concerns they might have to get, what obstructions they have to get into production. Most of the time, if they say they're going to take 3 years, add on another 3 years, so then you can start to get your supply curve right. Yeah, and so that's how you start to look at these things as to what can be the next big mover in the commodity space. And then look at the academic papers as to what they were, because that details what the uses were, where the deposits were found, what was the problems with those deposits, because those deposits come up and again and again and again and again under a different brand, especially with junior miners.
Right. Okay. So you've got to do your research, but it does sound like you can break this down into steps, and that may make it easier for investors to get a handle on what's going on. So you've given us really a lot to think about. But before I let you go, I want to ask if you had any other final thoughts that you would share with our audience
In terms of what? In terms of
in
investing.
terms of anything that we've been talking about.
Um, I think like if you're going to look at it from an investment perspective, I think you've got to take a step back and understand commodities, that a lot of these commodities have their day in the sun. And based on where you are on the curve, will determine where the next big idea is going to come from. So, like all too often, if I'm and a lot of companies come to me for because they've got a shell and they want to take out a deposit. So I can give you a nickel for every single person that goes, we want a lithium deposit that's brownfield, that's more than 1 million ounces, that's at least PEA, and it's got to be in South America. Let me tell you something. When they're all asking for that, you've missed the boat. And I'm not saying that that's not me predicting that lithium price is going to go down. Please don't mistake me. Like, I'm not going to say that. I'm just saying that that's not your next 1,000 hitter because it's just done. So it's your next thing in the yeah.
Okay, makes a lot of sense. Well, thank you so much for coming on to talk today. It was really great to get your perspective on all these different critical metals. I think you helped us break it down in a way that hopefully people can understand a little bit better how to address these markets. So thank you very much.
Thank you so much, Charlotte. Thank you for having me.
Of course, and once again, I'm Charlotte McLeod with the Investing News Network, and this is Lara Smith with Core Consultants and Molten Metals.